Welcome to the thematic introduction of the Fireside Chats on a Thursday morning. We are talking about a regular conversation starting at 10:30 this time. This will not be my usual garb. Knowing that it's summer, I am already starting to break out in a sweat, so this won't last long. Welcome all. It's lovely to have you join us for our inaugural Fireside Chat. This is designed to be short and sharp. If you've got a question, drop it in the comments. And if you're watching later, great. Still post and we'll pick it up next week. All right. Topic of today, capital gains tax. Is it going to change? Is it stuck the way it is? We've got the Liberals in their position of, it's never going to change. And if we win power, you'll never see a change. And you've got Albanese's going, well, and you've got Chalmers going, yeah, don't think so. So, Simon, where are we at in the political landscape? And then we'll get into what are the consequences if it does and what do we see it?
Yeah, so let's look at the practical version of what's going on, what's happening, what does it mean, what should people do next? Starting off with what's happening. Really, this has fallen out of a leak a while back that showed that the Federal Treasury had done some analysis on potential changes to the CGT and the potential impact on that. There's a parliamentary inquiry that's being led by the Greens, where the question of potential changes to CGT has come up. And I think this probably wouldn't be on the government's radar so much, but for some of that pressure from the Greens maybe. But really, it's all a little loose and vague. You've had suggestions that the CGT discount could potentially be reduced in the coming budget in May. You've had other suggestions that it won't be touched at all. So we will find out. But let's talk first about, what is this CGT discount? So for the uninitiated, when you own an asset, an investment asset for more than 12 months, you are potentially entitled to get a discount on tax on the capital gain of that asset in the future, even when you choose to sell it. And so what would ordinarily happen is the gain would get added to your tax bracket and you would pay tax on that. What the CGT discount does is it basically halves the capital gain that's added to your income when your tax is determined. So it's like getting a 50% discount on the tax that would otherwise apply to that capital gain. So there's a lot that's been bandied around by various people about this potentially creates some sort of unfair advantage for investors, particularly the wealthiest, this idea that these benefits are concentrated in sort of the top few percent of investors, but also the pushback that a lot of people who may take advantage of this are just your mum and dad investors who maybe only own one or two properties. So that's the context. What's being talked about is a possible change to that, not necessarily elimination of CGT discounting, although I'm sure some in politics would like to see that happen, but the idea that there might at least be an adjustment to it. So maybe the amount of CGT discount is reduced, or the categories of assets or properties that it's applied to gets modified. Cast your mind back, Brendan, to a couple of elections back when Labor went to the election with a policy to essentially abolish CGT discounting moving forwards, apart 2018. From the new housing. And what happened to Labor in that election?
So we were already in decline on the back of APRA's change. At that time, APRA increased its buffer, and that put a bit of a dampener on the investor market, and market started to decline. Then Labor announced, we're going to abolish capital gains tax, and the market just nosedived. There was a decline on top of APRA's changes, and it led us into a property market bottoming out, and it only recovered once the election was over and interest rates started to drop. So no, there is not a warmth towards the concept from investors, funnily enough. Interestingly enough, there are about 2 million investors. There's about, I think it's 20 million voters. So you've got to wonder, what is the voting impact? Now, if you're talking marginal seats and you're Liberal wanting to protect, I guess you'd want to protect those who are with the dollars. If you're Labor, you kind of want to protect those who are the blue collars and the workers. But there's still a lot of workers and blue collars that are doing wealth creation for themselves and using property to do so. So either way, both political parties will be paying a price if they go down that path.
If you look at what some of the commentary's been just over the last few days from the political parties. So as you mentioned, Brennan, you've had the coalition come out saying that they simply won't support any changes to the CGT discount for property investors. And
which is really great. From their perspective, it's really great because they put up this really solid, we are committed, we are policy driven, knowing full well they're going to lose the election, so it doesn't matter anyway.
Regardless, they have a position, right? And there's a certain base that they're appealing to with that. I think the quote that came out from the coalition was, if you tax homes, you get less homes. So they're playing up the whole, this won't help the housing crisis. In fact, it'll make it worse kind of angle if there is a change to CGT. From the position of the Labor government, you had the Federal Treasurer, Chalmers, who was asked explicitly by the ABC in an interview this week whether Labor would wind back the CGT discount. And the words that came out of his mouth were, quote, we haven't changed our tax policies, and we've got other ways of addressing intergenerational issues, such as building more homes, making it easier to save a deposit by, for instance, cutting income tax. So I don't think that's a definitive, we won't do it, because those exact words didn't come out of his mouth. It wasn't, we would not do this at all. But it does show, I think, that fear amongst the politicians, that resistance that comes off the back of their attempt to tamper with the CGT last time around, that led to their previous election loss. If you look at some of the other pollies, though, they're a little bit less definite in their statements. Albo, in particular, has been quite evasive over the last week on the question of changes to CGT. Basically avoiding the question, just saying, oh, I'm not going to say what might or might not be in the budget at this stage. We'll be working
political
through
speak
that
for
over and issues like intergenerational inequality and income tax cuts and all of that in the lead up to the budget. So it was a complete sidestepping of the question. So I wouldn't say it's off the table for Labor just on the basis of Chalmers.
Liked your comment earlier, Simon. It was move along, nothing to see here. Move along, move along.
That's right. These aren't the droids you're looking for. And there's clearly not a willingness to just come out and say, yes, we will change it at this stage. There's more of an unwillingness to do that. But that doesn't mean that, politicians being politicians, that there won't be something in the May budget that potentially tinkers with the CGT. But there's certainly not a strong political will in evidence at the moment to make the change on the part of Labor, more so from I think the Greens and putting pressure there. So that's what's happening at the moment, and that's obviously blown up in the media. It's causing some concern and uncertainty for investors. It's causing backlash on the investor side, saying, well, if that happens, then investors will just exit the market. Well, let's talk about what it actually could mean for the market and for investors. So, Brendan, do you think if there was a change to the CGT that investors would exit the market en masse?
The way I see it, there's going to be a line in the sand that says it will come in if we're going to make a change. And I'm anticipating if they do, it might be half of everything, half of negative gearing, half of capital gains tax. And if they're going to make a change, let's call it half, they're going to say, and this is the date it will take effect on. And if I say they're not going to make it retrospective, the backlash would be phenomenal for, I bought this 5 years ago and now you're saying, or I just spent $1 million on an investment property yesterday and now you're saying I can't today because you're I think it'd be grandfathered. I don't think there'll be any change. There's a question, especially 1985 pre-capital gains tax entirely. I'm saying there will be a line in the sand for which it goes forward, And it won't be retrospective because there would be hell to pay from everybody should that be the case.
And I think that's consistent with the position Labor took going into the 2018 election, where it was, if the changes had been brought in at that point, they were going to be grandfathered and wouldn't be retrospective.
Correct. Your question of me was, would that take investors out of the market? So that's interesting. I think it would. So you've got your historic investors who are, I've loved this space, I've loved this space, I've loved this space, I don't like this space, they may not buy again rapidly. But you've got the newbies who would be going, I didn't know any different, and this is actually a benefit. Even at half of it, it's still a benefit. So you'd probably get lesser people, lesser investors coming in. And I think they would need to temper the introduction of this with the creation and the finishing of all of the housing that they're building for the community. Back in the 1980s, the government at the time, Howard, said, you know what, should we privatise housing or should we keep it public? Oh, no, let's privatise it. So how do we privatise it? Well, no, we'll give incentives for the population to have the housing and control the housing by giving them capital gains tax concessions and by giving them negative gearing concessions. And that way we don't have to build it. The Greens recently, in my mind, have gone, no, you can't do that, bad and wrong, inequity. And to that end, they've gone, all right, great. Well, maybe we should now swing the pendulum back and make it more government-owned housing to control the housing as opposed to the private sector. And we're in the middle of that pendulum swing back, saying bad and wrong for all investors and all the wealth you've got, and it's not fair and it's inequitable and tall poppy shoot you down. So I'm suggesting that in that pendulum swing back, there will be we still need them because we haven't built them all yet, but we are looking to build more and control the public housing problem or the housing problem. So we're not there yet. We definitely do not have an abundance of government supplied housing at this stage.
And nor are we going to, because simply the government can't simply afford to produce the volumes that are.
No, they need trillions in housing. It's never going to happen.
What you mentioned there, Brendan, though, this whole concept that the CGT discount is unfair and gives a skewed advantage to some of the wealthiest people. Fun fact on that, there have been studies done back in 2023. I think the authors of those studies were Peter Abelson and Rosalind Joyer, if anyone wants to look it up. But those studies showed that if you look at how property values have moved, but you take into account the cost of housing improvements, so the money that's being spent to make houses better over time, those studies concluded that real house prices have risen by about 50% over the past 2 decades, or about 2% annual real growth. So given that inflation makes up more than half of the nominal growth of properties, the 50% discount really isn't much of a discount at all. So if you're saying, okay, well, I'm going to treat your gain as only half your gain, then you're not really seeing, once you take into account inflation pushing prices up, you're not really seeing that much of a difference compared to if you just taxed people, say, on an inflation indexed gain. So there's a debate behind the scenes here about whether there really is even a fairness issue here, whether there is a true advantage to be had from the capital gains tax discount. Now, that said, most investors would prefer to have it than not have it, I think.
I appreciate your mathematics. And yes, it's a study. How many people in this country have read that study? This is an emotional conversation. This is it's not fair. And it doesn't matter. As much as I hear you and I agree with the numbers and the mathematics, it doesn't matter. It's not the principle of the conversation. The conversation is the equity. The conversation is I'll never get into a house from the 20-year-olds. The conversation is the dichotomy of wealth in this country and the ever-expanding chasm that was once the middle class isn't the middle class anymore. It's upper and lower. You just get it. And that's the political conversation that's driving the policy change.
Correct. So what about some of the other potential, like leaving aside the emotional or political football that this is, what are some of the other potential arguments or consequences around doing this or not doing this? And if we think about what could be perhaps unintended consequences if CGT concessions were reduced or eliminated. Some of the arguments would be, well, that might result in investors being less inclined to invest in rental accommodation, which over time would reduce the rental supply. And as we know, everything's a balance of supply and demand. So if you have less supply, same demand, rents go up. So it could disadvantage renters. You end up with more renters potentially starting to compete with home buyers if they're seeing rents going up and less rental stock. Well, how do I get out of the rental market and into a house? I start competing more with the existing owner occupiers rather than choosing to rent, which could put upward pressure on the price of housing. You'd have potentially, depends on how they do it. Like if you look at what happened in 2018, the idea was to shift some of these incentives more towards the creation of new housing and really only apply negative gearing benefits and CGT benefits more to new homes rather than established homes. So depending on whether there was that sort of tinkering, you could potentially end up with less investment in new housing supply if these concessions were taken away from new housing supply as well as established. So there's that possibility as well. But one of the things I think, Brendan, is that if an investor is that focused on preserving their or not paying tax or not paying as much tax, so preserving the concession that they would otherwise have had on CGT, they have the option, don't they, just to not sell. So
yeah, correct.
If I feel like I'll pay too much tax on sale, well, I could just continue to hold, which then doesn't release housing stock to owner occupiers potentially because the investors just hang on to it.
There would be a hoarding.
It
a lot
doesn't
of people
create more revenue for the government either. And that's where I think one of the things we've seen in the media is this idea that one study has suggested that the cost to Australia of the CGT discount is something like $250 billion over the next decade. Now, to me, that's a little bit of a, I don't know about your opinion, Brendan, here, but to me, it's a bit of a furphy because the assumption there is that if you take away the concession, then investors will sell their properties and you'll recover more tax that way than you would have at the same rate of sale with the concession. But if it results in investors just going, you know what, I'll just sit tight, thanks, not selling it, then you don't recover any additional revenue and that fails any objective that you might have had around that.
Well, here's the big question. How many people in 1986 sold all their properties once capital gains tax came in 1985?
Excellent point.
All those people in 1985 said, oh, I'm going to have to pay capital gains tax if I buy something now. I know, I'll sell the ones I've got. And that don't attract any tax at all. I get to keep all the money. It's not going to happen. Exactly. So they're hoarded those. We, as our generation in this experience, will hoard these ones.
What should you be looking at? Well, I think be alert but not alarmed at this stage. Obviously, we'll monitor and see what actually comes out in the May budget, but I wouldn't be making any decisions based on rumor and speculation right now. I would maybe observe that if you're a more sophisticated investor and you're potentially using structuring anyway,
carries no significance.
Yeah, if this did change, so let's say the CGT discount was wiped out altogether. Well, as a more sophisticated investor, you might structure yourself and just hold your assets even under just a company and cap your tax rate at 30%. So if you're on the highest marginal tax bracket, say you're paying 47 cents, 48 cents in the dollar, you could still reduce the tax that you paid on sale of investment properties just by holding them under a company and paying, say, 30 cents in the dollar.
If you're doing add value projects, you're in and out anyway, and it doesn't apply. So, however, don't see this as an interesting and what's my business model? What am I doing anyway? Is there an implication here to me? And if there isn't, more of the same.
And if there is, your approach moving forwards. Exactly.
Correct. Talk to your accountant about it. All right. I think that needs to draw us to a close. I want to thank you ever so much for joining us for the Fireside Chat.
Quick shout out to new members. If you are new to the real estate success community, welcome aboard. A couple of next steps for you. Some of the best places to get started here. Do fully complete your profile, including a profile picture, short bio, fill in all the details, because that'll help you connect with other people and be seen in the community as well. Make sure you answer that icebreaker question to introduce yourself.
Icebreaker.
Check out the upcoming events. So there'll be these fireside chats every week, but there are other events happening as well. So make sure you check out the upcoming event space and jump into the event replays to catch up and get some quick wins from previous sessions as well.
In the meantime, cheers, guys.
We'll see you again for a Property Pulse at the same time again next week, next Thursday. We'll see you then.
Hey, guys.